What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AAPL for Apple Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talk about the stock regularly here on the channel, and the main thing to talk about today, at least, is the fact that 168 was defended for now, okay? For now. Big emphasis on the for now. The reason I say that is because we did produce a lower low and we clearly have a lower high. If you were watching intraday, it was pretty squirmish out there, right? At first, it looked fine, like we were going to recapture and hold back above. This afternoon pullback then broke it, then we rallied and closed back above at the close. So the volatility is extremely high right now inside of Apple. I mean, it was back and forth, whipsawing all around, which is why I say it's holding, but for now, right? Tomorrow, it could easily do something like this. It could have another one of these afternoon breakdowns and take us back down underneath 168. We get more price acceptance underneath. We know the next target's here, 164 quarter, okay? So for now, it is holding, as I pointed out clearly. Let's say that the breakout point, so to get involved long on this, there's potential, this is not a guarantee, but there's potential for this double bottom neckline to break here and take us for the backtest of the 171 area, which is the low end of the daily bull flag that I've just drawn in on the left-hand side. Okay, I would seriously reevaluate the chart around 171, especially if the broader marketplace continues to be bearish, which it sort of was today, right? Sure, it may have felt like some indecisive green in the QQQ, but nonetheless, it's still price acceptance underneath that critical balance level, which we talked about. You can go watch the video. That's besides the point here, but definitely reevaluate Apple at 171 if we get there in the first place and this double bottom pans out. There's another way you could look at this, of course, which is if I take out the Fibonacci's, let me just come in from the high of the breakdown. Let's come from that red candle to the low. Here we are. We're underneath the 38.2. This is nothing more than bear flag consolidation. We look for a breakdown of the lows, and that once again takes us to 164 quarter, coming from the top end of here where the breakout really stemmed from. Of course, earnings had a lot to do with that as well. And if that goes, that really opens the door for the shorts, right? So there's a couple of ways to be thinking about Apple. I would say it's in a fairly indecisive spot based on what was going on the 30-minute, based on where we're at on the daily. 168 needs to give us some more direction before we can get overly aggressive inside of Apple. You could even do something like this. I don't want to remove 168 because it's such an important level, but if you want the ultimate sort of guide to Apple, it's under or over one of those levels. It's the neckline breakout around 169 half to bring you here, or it's the breakdown of the double bottom lows around 167 to bring you into the lower target. Anything in between, day trades only, chop, expect back and forth, not a whole ton of direction. That's all I've got for you inside of Apple. If you enjoyed the video today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.